Welcome, everyone. We'll start in 2 or 3 minutes. Can I suggest that if you'd like, you could rename yourself in the chat with your organization name? That would be great. Hello, Akil. Yes, please do say hi in the chat if you'd like before we get started. Everyone else will be able to see it. Lots of people coming in now. Hi, Adrienne. Hi, Deborah. Rob, hello. Okay, there are lots of people still coming into the webinar, but I think we'll probably get started. I've got a few things to say before we kick off with what you actually come to see. Welcome, everyone. My name's Sam Mendelsohn. I'm Financial Inclusion Specialist at e-MFP. I'm the e-MFP lead, supported by my colleague Fernando for this WASH Action Group, which is a joint venture between e-MFP and our friends and partners, Aqua for All. Delighted to have you all here for the first in what's a new series of events on this important topic. The Action Group started in 2022 with the objective to generate information and insights that can reduce uncertainty and tackle the challenges faced by e-MFP members in the water and sanitation sector, especially impact investors, and to help them foster collaboration, cooperation, and knowledge sharing among all parties and to catalyze new investments. Before we get into the topic proper, a little bit about what this action group is doing to date. As we all surely know, the wash sector is vital for public health and economic development, but billions of people lack safe drinking water and even more lack safe sanitation. But there's a lack of standardized reporting frameworks and impact measurement among asset managers that limits the potential of this sector. So when this AG was set up, e-MFP and Aqua for All developed initially a handbook and then an indicator framework. This was to guide the activities of impact investors in the wash sector. And then we wanted to evaluate the applicability and adoption of this, and so worked with Microsafe Consulting and did a study on current impact measurement practices. And then based on these findings, we took us up to what we're doing now, which is field testing a list of impact indicators for participating financial institutions. Watch this space. There will be more to come in the new year, and before that at Inclusive Finance 25, which is e-MFP's annual event taking place in November. You may have seen the rebrand communications yesterday. It used to be called European Microfinance Week. There will be a WASH session there. Please do come to Luxembourg. Please do attend that session if you can. And if you can't, then online attendance is available. Fernando, if you wouldn't mind, Fernando has put the new URL for the conference in the chat. So please do register. Please have a look. This is a great webinar today to kick off this new series that will start with why WASH matters more than ever. Opportunities for change, investment, and impact. And we're going to start comparatively broad and over the series focus down into the more narrow and technical areas of what is a highly transversal field. For now, though, I just want to welcome and thank Jack Strasser, who's leading the knowledge side of this work and to whom we're very grateful. And I'll be handing over in a moment. A little bit of housekeeping. We'd love questions either on the action group itself or on e-MFP or Aqua for All's work, or the other speakers' organizations, or of course, what they actually are having to say today. Could we ask that you use the chat for chat, saying hello to other people, introduce yourself to other attendees if you like, but questions through the Q&A function. Everyone's familiar with this by now, but please put them in there, keep them as specific and direct as you can, and then we'll either try to handle them in writing, or some of the speakers that we've got today will take them live. Without any more, I'll say welcome and thank you to everyone, and to Marcella from Aqua for All, who'll be closing this session and inviting input from any of you in terms of blogs or case studies or other knowledge products as well, and indeed funding opportunities for future research. But for now, it's goodbye from me, and I'll hand over to Jack. Thanks a lot, Jack.
Awesome. Thank you, Sam. Hi, everybody. It's really nice to have you here. Yeah, as Sam was saying, thank you very much for joining us for the launch of this sort of second webinar series. My name is Jack Strasser. I'm a consultant with e-MFP, and I'm a knowledge coordinator for the WASH Action Group specifically. I'm just going to get right into it. I'm really excited about the speakers that we have today. Joining us from, actually, he did a previous webinar last year from UNICEF is Jorge Alvarez Sala, who we're very glad to have us joining from New York. We also have Alexander Mateus from Aqua for All, and we also have Aparna Pitié from INCOFIN. I'd like to say INCOFIN and Aqua for All are very closely linked in their projects, and so we're going to get to that. Aparna is currently in the airport and dealing with airport matters, so she's going to make it as soon as possible, and everything is smooth sailing. So yeah, I mean, just to intro a little bit the speakers a little bit more, UNICEF, excuse me, of course, is a huge player in the WASH space. Aqua for All, excuse me, is an international foundation working to mobilize private capital and strengthen enterprises to transform the WASH sector and in low and middle income countries. And INCOFIN Investment Management is a Belgian asset manager working towards impact investment, and they often work together. So as we want to give you a sort of broad introduction and overview of the WASH space, we thought we wanted to bring together a public entity in UNICEF, an entity that's working and has feet in both fields in Aqua for All, and then a more private-oriented entity in INCOFIN. Yeah, just to intro Jorge real quick, Jorge is an awesome water and sanitation specialist with over 20 years of international experience in the sector. He's worked with every single continent. Jorge currently works with UNICEF in New York, where he's responsible for the water portfolio. And for those who do not know, UNICEF is the UN leading agency in drinking water and sanitation, with WASH programs with over 100 countries and an annual investment of more than $1 billion US per year. So that's all from me. Thank you very much for being here, and I will hand it off to Jorge for his presentation.
Thank you very much, Jack, and very good morning, good afternoon, and good evening, wherever you are. I've been asked to share with you some reflections on what are the opportunities, risks, and how to engage private sector investment in the WASH sector, in particular in this moment in time. As Jack mentioned earlier, I was invited to participate in a webinar around 1 year ago. We might have the impression that a lot has happened in the last year, especially if you work in the development sector. But as you will see in the next slides, maybe not. Maybe the sector has not been as impacted as we might believe. So if we move to the next slide, I have prepared a few slides mostly to trigger a bit of reflections and to provoke a little bit the audience. Why WASH matters for investors? Well, WASH and the Sustainable Development Goal number 6 is perhaps the only SDG that really underpins every other development goal. Is foundational for health, for education, for socioeconomic development, productivity, business, for the environment, for climate. And as per the latest joint monitoring program, the UNICEF WHO track of the Sustainable Development Goal number 6.1 and 6.2, There are 2.1 billion people that still lack safely managed drinking water. Globally, 3.4 still lacking safely managed sanitation, and 1.7 lacking basic hygiene. This is from the recent report that you can see in the bottom left of the slide. This sector is underfunded, despite the fact that it is a substantial contributor to health outcomes, to socioeconomic outcomes, and also to environmental and climate outcomes. Here you can see a slide that I like to highlight how the sector has progressed in some areas, how the world has evolved in the last 24 years. You can see the dots represent, I think, 100 million people. So you can see that there has been a very significant growth in terms of population in urban areas from 2.9 to 4.7 billion. And the number of people gaining access to safely managed water services and sanitation services has grown significantly. However, there are still significant gaps, in particular in rural areas, in terms of lower levels of service. If we move to the next slide, we will have a quick look at how hungry the sector is for funding. To achieve SDG 6.1 and 6.2 water and sanitation, we need to multiply by 8 times the rate of progress in water and 6 times the rate of progress in sanitation. Some years ago, the World Bank estimated that we need at least 114 billion US dollars per year to meet the Sustainable Development Goals. More recent estimates from the World Bank put the bar into 141, but there's still at the moment some additional estimates, and most likely this number is likely to increase. The WASH investment at the moment is in the order of 70 billion US dollars per year, and that represents 0.82% of GDP on average. Out of these 70 billion US dollars a year reported or estimated by OECD, ODA represents a very small proportion, roughly 8.5 billion US dollars. And that represents on average $33 per capita. So it's not, I would say, a very significant investment, in particular when you consider those who are underserved with water and sanitation services, who often pay much more than what an average citizen in Europe or in the United States pays for water and sanitation services every year. The household investment represents 50% of that of those 70 billion US dollars per year. And I would like to highlight this because I understand that the audience works a lot in the last mile with the microcredits to households, and households actually represent a very significant proportion of the total investments in the sector. In the next slide, we will see the impact of aid cuts. Allow me to take this with a pinch of salt, because I know that it's not as simple as I presented here. But the 2025 aid cuts, that if you are following the news in international development, there has been a lot of buzz on the impacts of cuts from USAID, for instance. USAID invested roughly 450 million US dollars per year in the WASH sector. Other donors are also downsizing their investments in official development assistance, in ODA. However, ODA represents 17% of all WASH sector investments. So it's not a very significant chunk of these 70 billion US dollar invested every year, and grants represent a mere 2%. So repayable finance is quite significant in terms of ODA. And to my understanding, the cycles and the investments in ODA repayable finance haven't been very significantly affected, at least so far. However, again, it is important to mention that the impact of ODA for the whole sector should not be underestimated, even if grants might represent a mere 2%. In many cases, this is I would say, the grease that moves the engine, and that's what I wanted to represent in the figure on the right side. Without some, I would say, essential investments in system strengthening, in the broader enabling environment, the other pieces of the puzzle might not work as well as it has been worked or not worked in the past. In the next slide, I'm sharing a triangle. It is called the Pyramid of Transformation that was developed as part of the African Investment Program. This is an initiative from the African Union to mobilize $30 billion per year to meet SDG 6 in the African continent. I like this triangle because unlike previous attempts to mobilize and to leverage ODA, what we can see in the tip of the pyramid is a very small ask to increase bilateral ODA and philanthropy in Africa. The AIP, the African Investment Program, estimated, the OECD estimated that roughly $1.5 billion were invested in the African continent in water and sanitation services. And the suggestion was to just increase slightly this amount. But as you can see here, the chunk of the gap could be filled with domestic resource mobilization. Actually, $7.5 billion out of the 30 billion should be mobilized or could be mobilized through domestic resource mobilization. The three T's, the taxes, transfers, and tariffs are essential in this picture. And something that is not, I would say, not minor is the need to identify sector efficiencies. The AIP identified that $11.5 billion could be saved from a better allocation of funds within the sector and a better management of funds within the sector. Next slide, please. So where private capital fits in this picture? Most likely you have discussed in previous sessions and internally in your organizations about the PPP, the private-public partnerships and blended structures. There are some successful stories on PPPs for drinking water supply, for utilities, bonds and commercial loans alongside with concessional finance. Some examples that I could identify quickly for this presentation are the Kigali bulk water. I think it's around $60 million, if I'm not mistaken, funded by the World Bank. The Metro Manila water utility, which is another good example of privatization that went well and that actually contributed to increase coverage and to improve the service. But there are also bad examples of PPPs, and in some contexts and some actors are a bit reluctant to even consider private sector investment in certain countries and contexts. This is something that we have to acknowledge, and we have to make sure that as a private sector, the practices keep in mind that this is a very sensitive sector that often operates in monopoly, and the ethical standards and the management and the transparency and the perceptions of conflict of interest, etc., need to be taken into account to be successful, not only from a I would say, from an economical point of view, but also from the long-term sustainability of the investments that that private companies do on this. Next slide, please. In addition to the PPPs, I would say to the more conventional investments, there are also some investments in efficiencies. I put the pyramid of transformation on purpose because you could see this 11 billion US dollars that could be saved from improved efficiencies. For every dollar, we don't know exactly how much is returned on investment in terms of socioeconomic benefits. Some authors estimate between 2 for water, 5.5 for sanitation, but most likely those are underestimates of the actual cost benefit analysis. Unfortunately, we don't have more recent analysis of this cost benefit. But in addition to these kind of socioeconomic benefits, there are some elements that private sector investors can invest and can contribute to significant gains for the sector and for the companies that you could be eventually lending the money. One of the clear examples is non-revenue water. Non-revenue water is the part of water that is not billed and is therefore not generating revenues, but producing and distributing this non-revenue water cost money to the utility. In many developing countries, 35 to 50%, even more than 50% of water extracted from boreholes or from rivers and treated, etc., is not billed finally. And this has, of course, huge implications in terms of cash flows. It has implications in terms of over-extraction of water that is later not used. But it also has an impact in the credit worthiness of utilities. I experienced, for instance, in a city in Southeast Asia, how investing in non-revenue water moved the utility from receiving a subsidy from the government to contributing to the government budget, becoming self-sustained and financially contributing to the expansion of the services and to expand and to contribute financially to the utility with just investing in non-revenue water. Tariff recovery is often partial. This is another important bottleneck in the water sector. In the EU is 70% of costs, and tariffs are often I would say the elephant in the room. For politicians, it is never a good time to raise tariffs, but it is vital to ensure the long-term sustainability of the services and to establish a culture of payment for the services that the population receives. Next slide. What are the opportunities, the additional opportunities that we can identify across the wash value chain? In addition to the, let's say, the big utilities in drinking water supply, of course, the service providers are in the development world, in the global south, of course, in need of big infrastructure investments, treatment plants, desalinations, etc. But there are some, there are some decentralized solutions that can also be put in place and are also quite effective in the provision of services, from decentralized treatment, decentralized point of use, fecal sludge management instead of sewage networks. And then, of course, there are areas within the water sector that are also attracting at the moment a lot of attention on the digitalization, the analytics, the Internet of Things, the use of AI to improve operation and maintenance. Of course, two important consumers of water include industries and include the irrigation sector. So improving efficiencies in those two sectors make a significant improvement for the whole wash value chain. Next slide. What are the key risks and barriers to scale up? Well, I already mentioned some of them. Mitigation of risks via guarantees, technical assistance, stronger designs, and phase pilots can contribute to reduce those risks. Often the time, investors, both public and private, flag the fact that regulators are not up to the level expected, and this creates uncertainty in terms of investments. I was in an Eastern Africa country where the private sector, the multinationals, were requesting the government to create a regulator and to strengthen regulation. This is something that still strikes me today, but of course, this multinational was making big investments in the country and wanted to have reassurance that the water extractions that was making for the industry is licensed and is complying with not only with the current regulations, but with the future regulations. So regulation is, I believe, essential for creating an enabling environment that is encouraging both public and private investment. Tariffs, I already mentioned, but also we have to consider the impact of climate. And you will see that along this presentation, I include the word climate in many slides. Climate is already impacting the sector significantly, and there are opportunities to leverage existing climate finance instruments from both private and public financiers. And I repeat, the tariffs, transfers, and taxes. Tariff reforms are needed in many, many countries, but are not always welcome by decision makers, by politicians. However, when they are properly explained to the public, and when there is an improvement in the level of service as a consequence of the increase of tariffs, I believe that the public is often eager to pay more for a better service. Next slide, please. I'm almost finalizing my presentation. Apologies if I'm going a little bit over time. How investors can engage. There are some practical steps. I'm not going to go through them because I have the impression that I'm already a bit over time. But of course, there are some elements that investors can do to engage in the sector. In the next slide, you have some additional elements where the private sector can contribute to the sector on innovation, on providing technical expertise that facilitates and contributes to this enabling environment, and also contributing to the broader water security. I think it is in the interest of private sector and public sector to secure water and sanitation services for all. And my last slide is about the linkages with the climate agenda that I mentioned earlier, and some key messages. Climate is here. It is something that you need to incorporate in your risk analysis. Most likely all of you are already incorporating. And water is a common good and an economic good. So is something that is part of the equation. And I think I'm going to stop here and pass it over to Jack. Thank you very much.
Awesome, Jorge. Thank you so much. We're going to wrap around with some more questions. Thank you again for doing your presentation. So I'm going to quickly hand it off to Alexander here, just to intro Alexander from Aqua for All. Alexander has a diverse background in strategy, entrepreneurship, and investment. He began as a consultant working in M&A and valuation projects, and he's supported many strategic initiatives across the portfolios of various companies. His journey led him to venture capital, where he collaborated with startups and investors to foster sustainable business models in the energy sector, and then eventually found his way to Aqua for All, where he is today. So thank you very much, Alexander, and I give you the floor.
Thank you, Jack, and hi, everyone. Excited to share Aqua's for all journey in impact and sanitation sector, and particularly through innovative financing solutions and mechanisms and strategic partnerships. So that's what we're talking here today. If we can go to the next slide, please. So to introduce a little bit about Aqua for All. So we're an international organization focused on water sanitation. Our mission is to bridge the financing gap in the wash sector by combining both market development and impact finance. So we operate primarily in Africa, Asia, the MENA region, using instruments such as smart grants, first loss capital, technical assistance, and blended finance models to catalyze sustainable change. Next slide, please. So as Jorge already mentioned, SDG 6 is one of the most underfunded sustainable development goals. I'm not going into the numbers again, but one alarming point is that 72% of the allocated budgets still go unspent due to inefficiencies. And this is where Aqua steps in. So to unlock and optimize the use of capital. Next slide, please. So our approach is centered on capital mobilization, impactful investments, and sustainable finance access. We invest risk capital in funds and financial institutions that support SMEs in infrastructure projects. We also provide first loss capital, technical assistance, and other blended finance solutions, as I said, to de-risk investments and attract private sector participation, which is very important to us. Additionally, we also work with SMEs to help them bring to an investment-ready position, usually by providing grants, impact-linked finance, or technical assistance. In the next slide, we can see that since mid-2019, Aqua has facilitated 143 million euros in transactions, supported 935 SMEs, and mobilized 4 times the total capital deployed. When it comes to our work with the fund managers and financial institutions, this capital mobilization goes to 8.2 times the deployed capital, which means that it can have also a bigger mobilization potential here. Next slide, please. So as I mentioned, we offer a variety of instruments to de-risk and mobilize capital into the water sanitation sector. And it's also important to mention that regarding technical assistance, this can be offered in parallel to other instruments, as we will see further down the presentation, or as a standalone solution to fund managers and financial institutions and MFIs specifically. So to give you a little bit more context in the next slide, please. So our ticket sizes range from 250K to 2.5 million euros for de-risking, and up to 200,000 euros for technical assistance. We deploy capital in private markets to strengthen enterprise infrastructure projects, as I said, and we attract funding from corporate foundations, family offices, DFIs, and increasingly from institutional investors and corporates also. By leveraging catalytic capital, we can generate these financial returns, measurable impact, and mobilize private sector investment, which is very important. To give a little bit more flavor, so in the next slide, please, of our work with the fund managers and the asset managers. We've partnered with the managers across several regions, so Africa, Asia, low middle income countries in general, to help mobilize more than 190 million euros in financing deals through instruments like first loss, equity, technical assistance, and structuring grants. And one thing that I think is very important for these sessions, particularly for the next slide, please, is our work with the financial institutions and MFIs. We've been working with these institutions closely in several countries such as Ethiopia, Kenya, Uganda, Senegal, Indonesia, Cambodia, in providing technical assistance, matching grants, and other credit and investment facilities and other kinds of instruments. So these partnerships are crucial for building local capacity and enabling long-term access to finance. Next slide, please. So to round off with a case of our work, one of our initiatives has been to invest in the Water Access and Acceleration Fund managed by INCOFIN. This is a private equity fund that's investing in safe drinking water in Africa and Asia, but apparently we'll be able to better talk about this. At Aqua for All, we've invested in the first loss tranche of the fund. What this means is that we've taken the riskiest layer of capital, which is designed to absorb the initial losses if the fund underperforms, which of course we're always confident that it won't happen. But this structure is really important because it helps de-risk the investments for senior equity investors. So by protecting them from early losses, we're able to offer more attractive terms and ultimately mobilize more private capital into the fund and to the water sanitation sector as a whole. In one of the Water Access Acceleration Fund investments was in Right Water, which is a company tackling water and contamination in rural India. And as part of Aqua's for All investment in the fund, there is a component for pre-investment technical assistance for a selected number of potential investees. So in this case, it will be 5 enterprises up to a maximum of 500,000 euros. And these results show that impact finance works. So when paired technical assistance with the first loss investment, we've been able to build a strong partnership that has been able to take Right Water to an investment-ready position to then take an investment from INCOFIN. And yeah, so all in all, thank you for joining. I think maybe next slide, just to show contact details. Thank you for joining. And yeah, if you like to learn more, feel free to reach out. And yeah, thank you very much. Back to you, Jack.
Awesome. Thank you so much, Alexander, for the presentation. Yeah, the contact details are going to be up on the presentation, which is going to be also put on the e-MFP website after this. So you can definitely grab those if you have any questions. Speaking of which, please feel free to ask some questions in the Q&A chat. We would love to hear your feedback, and we want to know what you're thinking because we are going to have some time allotted at the end of this webinar for answering some of your questions. And so Aparna Pitié from INCOFIN actually is here. So that's awesome. I'm just going to intro her real quick before we let her present. So Ms. Aparna Pitié is the partner of the Water Access Acceleration Fund, which Alexander just sort of referenced at W2AF. The W2AF is a pioneering fund aiming to provide 20 billion liters of safe drinking water to 30 million low-income beneficiaries by 2030. She has 20 years of global experience in private equity, capital markets, and investment banking across London, Delhi, and Mumbai. Aparna, the floor is yours.
Great. Thanks so much, Jack. I think a very quick introduction to the Water Access Acceleration Fund. So I think Jack already mentioned, what our quantifiable targets are for the year 2030. But just as a little bit sort of more detail is that we're a private equity fund, and it's a closed-ended fund, which means that we have 10 years basically to invest and exit. But those are the practicalities, right? I mean, if you were to understand what the fund does, the mandate of the fund is to invest in drinking water, and to be able to invest in those businesses that are serving the bottom of the pyramid, right? So when we were designing the fund and its mandate and the theory of change, we focused on three things. One is that, water access is a big problem. 4 billion people in the world today don't have access to safely managed drinking water. Jorge and Alexander already spoke a lot about the financing gap. And we were thinking along the lines of how private investment can be a catalytic signal or a catalytic investor to more scaled capital. And that's where the mandate of this fund came along. Jack, if we could move to the next slide, please. So what we do is that we invest in either equity or convertible instruments. Our fund size is about 61 million euros. And our ticket sizes are anywhere between 3 to 8 million euros. We aim to invest across Africa, Latin America, and Asia. And it would sort of roughly be 50% Asia, 40% Africa, and the rest opportunistically in Latin America. What we would like to believe is that we're patient capital. Though I did mention we're a closed-ended fund and we need to exit at some point, we want to stay invested in the business for anywhere between 5 to 7 years. And what kind of businesses do we invest in? We invest in businesses that are anywhere along the drinking water value chain. So it could be right from the extraction of raw water up until the recycling of used water and anything in between, right? But one thing to note is that we would like to invest in growth capital. And what that means is that we don't really invest in very early stage businesses. So it would be businesses that can absorb the kind of ticket sizes of 3 to 8 million euros that we want to invest. Now, other than enabling the access of safe drinking water to low income communities, we also want to be in a position where we can prove the usefulness of a blended finance structure like ours. So, the Water Access Acceleration Fund, we have as LPs development finance institutions, we have corporates, we have philanthropies, we also have some commercial investors. So, what we've done in this fund is that we've blended the different stakeholder investment objectives to create one fund that will cater to all these varying investment objectives, right? So one of the reasons for this fund and the structure is to prove how blended finance instruments can work together and work together well. And of course, we've there's always been a discussion on how water is a public commodity, and the fact that now we want to invest private capital in water also brings with it a certain element of financial viability, right? I mean, water businesses, traditionally utilities, have not been the most popular sort of profitable companies, right? And this is something that we would like to address by way of our investments as well. Next slide, Jack, please. So I think I won't go into the detail of this, but I already mentioned that we are looking to mobilize capital into growth stage businesses. And so if you see that gap, basically is what we're trying to show is the potential or the increase in the potential of a company with our capital, which is at growth stage. Next slide, please. Again, this is Worf's theory of change. I think Jorge mentioned a bit about SDG 6. That is our main SDG that we would like to focus on. But the fact that water has traditionally been, or lack of water, or gaining access to water has traditionally been not a very gender neutral activity. It generally falls on the shoulders of the women in the household. We also impact a lot of SDG 5, which is gender equity, and of course health as well, right? So SDGs 6, 3 and 5 are the ones that we would typically focus on. Uh, if we can go to the next slide, Jack. Yeah, I think I wanted to spend some time on this, and so a few reasons that we looked at Right Water Solutions in India as one of our first investments is something that I wanted to talk to you about, because this investment proves that any investor who is coming into the wash sector, by the very nature of the sector, it's a highly impactful sector, right? And so the impact is already a given. But I also wanted to talk a little bit about why such an investment can be financially sustainable and why people should look at investment in the water sector and in the wash sector at large, right? So this is one of the investments that we're very proud of. It's actually located not in any of the metros in India, but it's a very small city right in the center of India, where it becomes really really hot, like 50 degrees in the summer, and there's a huge scarcity of water. So there is this um, founder by the name of Mr. Abhijit Gan, who founded this company. Actually, his father founded it in 2006, and his son is continuing the work now. What they do is that they set up water purification units in rural parts of India where the groundwater or the surface water is not fit for drinking. And what they do is that sometimes they work privately, but to add on to what Jorge said, this is a great example in India of the public private partnership, where we have a $50 billion government program which is aimed at providing safe drinking water at the household level, right? And Right Water Solutions works with the government in a PPP model, to be able to build out these solutions right from the extraction of raw water, purification, and then distribution at the household level. So it does the entire chain of the uh, drinking water. But I think very importantly, and this is something that I want to focus on a lot, is very important. After incurring all the capital expenditure, there has to be someone who can maintain it, right? And this O&M, the operations which actually determine that the quality of the water is still safe to drink, is something that is also done by Right Water Solutions as one of their services, right? So this is what they do in a nutshell. And why we wanted to invest in them was, a sort of a two, I think a double bottom reason. One is they've been extremely strong when it came to growth, both on the ground in terms of the number of projects they were doing. When we started off, they covered 2,500 villages in the country, servicing about 1.5 million people, right? And Jack, if we go on to the next slide, please. What we are looking at now, and maybe this is on the next slide actually, but if we can stay here, currently they are servicing about 8,400 villages, and they are servicing about 8 and almost 9 million people, right? Which is almost 6 times the amount since we invested. Not only that, they are also providing about 5.8 billion liters of drinking water a year. And that is a phenomenal scale to reach by, any sort of stretch of imagination. Now, what was the role that the WAF and we actually played over the last 3 years in helping Right Water scale, right? Jack, if we could go to the previous slide, please. There were some areas that we definitely looked at. So the first one was in the operations, right? It was a very family led business. We were very instrumental in professionalizing and in making it a more corporate sort of organization by building a second layer of senior executives below the promoters. There was no female representation on the board. Of course, I am one of the board members, but we also encouraged the company to recruit another independent female board member. What we also did was help in thinking about diversifying revenues out of only drinking water. And here, of course, Aqua for All was very instrumental, because we partnered together, we collaborated in designing a technical assistance program for them, whereby they could also monetize carbon credits through this business, which means that had they not got safe drinking water from the tap, they would be using some sort of fossil fuel to actually boil the water before drinking. And because of all that fossil fuel saved, they are now able to gather carbon credits, which would actually help them to diversify into another revenue stream. I think very close to our heart as an impact investor is the ESG focus. We put out like a 3-year plan for them, which we call the ESAP, which is the Environmental and Social Action Plan, which aligns with the IFC performance standards, and built in an impact measurement methodology, which we also report to our LPs, right? Additionally, we got an ESG consultant on board, which acts as an arm of their sort of ESG team and helps them in that. Over and above that, we've also got things into place, things like an audit committee, a remuneration committee, a finance committee, to sort of streamline a lot of their governance procedures. So this is the value add as private equity investors that we bring into the company. Next
Aparna,
slide.
I'm
Yeah,
sorry. We should wrap up because we have to get to the Q&A.
yeah,
I'm very sorry to cut you off. If you have like one sentence to wrap it
yeah.
up, that would be super, and then we'll jump into the Q&A here.
Yeah, sure. So I think
Sorry about that.
we're almost done, but I think one thing I would really want to wrap up with is by saying that um, when we said that one of our fund mandates was to act as catalytic investors and bring in more scaled private capital into the sector, I'm very happy to say that we invested 7.5 million euros in the company, and 4 years down the line, they have listed for an IPO, and they're looking to raise 4 times that amount. So I think this is testament to the kind of role that we want to see private investments playing in the wash sector. So I would end with that. Jack, back to you.
Awesome. Thank you so much. Apologies again. I know we're a little pressed for time, but thank you again to the panelists and the speakers. This is really wonderful and robust, deep insights that we have here. So we have a couple of questions in the Q&A. We're going to try to bang those out quickly before we wrap up. And I would like to say thank you again for the audience for your really good questions. So the first one we have is from Christy. So she says, lots of mention of TA. What specifically have you found most necessary or beneficial? TA to financing institutions, lending into wash markets, TA to wash service providers and utilities. If the latter, that is wash service providers and utilities, is it basic business development, project preparation and refinement? Thanks. So if anyone could speak on that, maybe Alexander, do you have thoughts on that? Or you could speak on that briefly.
Yeah, I can give you a quick comment on this. So, in essence, I don't believe there's one that's most necessary or beneficial. Every kind of a TA2, every kind of provider has its own service. What I can say is I can give two quick examples. So if we take Wright's example, this TA helped them diversify their revenue streams and allow for product development, which strengthened their investment readiness for the Water Access and Acceleration Fund. This is one good example of how TA can be applied. In the case of MFIs or FIs even, it can also be used to help structure different facilities. So do some product review, training, branch staff, or even just undertaking marketing and promotion activities. So again, every kind of TA has its own good incentives and points, and all of them should be considered. None is more important than the other, in my opinion.
Awesome. All right, thank you, Alexander. So actually, back to Aparna, we have a really quick question for you. They're wondering, Camille Harret is wondering, what's the time horizon of the Jal Jeevan mission? If you could briefly.
Yeah, sure. Thanks, Camille, for that question. So the Jal Jeevan mission was initially a 4-year program. So it was started in 2020. It should have gone on up until 2024. But giving access to 1.5 billion people in 4 years was quite ambitious by any stand. And so now that's been extended up until 2028. So 8 years in all.
Awesome. Thank you so much for that. And the third question we have is from Natalia Realpi Carrillo. She's wondering, are you tracking indicators that allow you to look at the improved access at the household level? She saw the indicators were concerning quote unquote expenses for water and quote unquote women employees, but these are more operational indicators of the investees, which might not give a picture of the impact. Are there impact management systems used for this? The question's from Alfonso. Okay, not Natalia, but the question remains.
That's a great question, and maybe I can take it. So, see, there are two things when we measure impact, right? One is the quantity of the impact, which is measured by, the things that you said, expenses, how affordable the drinking water is, number of beneficiaries, women, etc. The second thing that you're alluding to is the quality or the depth of the impact, right? And how is that actually seen, or how does it come up in things like health, time that women get to pursue other activities like maybe commercial, maybe earning money. Now, this is a very valid question, and this is something that we as a fund have been discussing with our LPs, right? And in order to actually track the quality of the impact, we have instituted impact surveys which are done by ESG consultants, sometimes the Big Four. And what these are primary surveys where people go to sample houses in different villages that are covered by our investees and do a questionnaire. They do interviews with them to understand how their quality of life has improved, how kids are falling less ill. That's one thing. The second thing, and very telling, is we go to hospitals and schools in the areas to talk to teachers, to talk to doctors and nurses, to understand. Obviously, this is not short term, it's probably 3 years after we've invested, to understand if there has been, any change in attendance that has improved, or kids falling less ill, waterborne diseases, things like that. So we've instituted these surveys, primary surveys, that we do at the household levels.
Awesome. Thank you so much. So we have one more question, but Aparna, I think because of time, thank you to my take Hope for the question, but because of time restraints, we're gonna get back to you on the question later. Aparna will be in touch about that, but it's a very insightful question. Just before we sort of wrap up, because I'm gonna hand it off to Marcella in a little bit, I just wanted to ask to hear from all the speakers, if you could just give 1 or 2 sentences of to the audience, what you want the audience to really take away from this webinar. Just 1 or 2 sentences before we leave. We'll start with Jorge. We'll go in the presentation sort of order. So Jorge, I'd love 1 or 2 sentences, like what can we really take away home from this?
Thank you. I mean, to me, the main message is don't be scared by the news around ODA. I believe that there are still many opportunities in the sector. The sector is still delivering, and I believe that more than ever, there is a very important role to play in the private sector. From the private sector in the water and sanitation sector. Over.
Awesome, thank you, Jorge. All right, Alexander.
Yeah, so just wanted to highlight the importance of mobilizing private capital into the sector. So it's a sector that usually people think that it's all about household and access to water via household, but it also involves other parts of the value chain. So corporates are also involved, and it will also have impact into their value chains and operations. So it's good to see that there's more private capital coming into the sector from different kinds of providers, not only the ones that we're used to, and it's important to keep on building on that and mobilize more private capital into the sector.
Awesome. And Aparna?
I think I completely agree with my co-panelists, but one thing that I wanted to add, I've spoken at a panel at the World Economic Forum's WASH event yesterday, and I think it was absolutely clear that the private sector has a large part to play, but it cannot be done in isolation of the public sector, because the government is involved in every, I would say everything in the water space, whether as a regulator, as a consumer, as a provider of raw water. So I think it has to be a partnership, and most definitely within the private investment circle, it's a highly impactful investment. And I don't think we should look at water and climate investment separately, because 80% of all climate issues are attributable to water. So it's very much a climate agenda.
Awesome. Thank you guys so much again for being here. I'm going to hand it off to Marcella from Aqua for All. So Marcella, you have the floor.
Yeah, thanks so much, Jack. And thanks again, Alex, Aparna, Jorge, for your insightful and really thought-provoking presentations. And I think these are the topics and major questions that all of us at the Action Group, at the WASH Action Group, and at e-MFP, at Aqua are working really hard to answer. So to everyone in the audience who have any interest in collaborating with the Action Group, or would like to contribute in any way through some of the means that Sam already mentioned, through or through any new activities, please do not hesitate to reach out to any of us, particularly to Sam or myself. One last thing to the technical crew and to Jack for handling the logistics so amazingly, and to the audience. We hope that you're taking some food for thought. We hope to see you in Luxembourg, or if not, at the next webinar. And that would be all. Goodbye, everyone.
Thank you.
Thanks, everyone.
Thank you. Goodbye.
Goodbye. Bye-bye.
Bye.